I'd rather be perfectly honest and say, do you know what, this isn't for us. Don't think that you could potentially try and hide something that won't come out further down the line, because ultimately it will. Most of the problems with any kind of refurbishment always come with underestimating the amount of costing or timing it's going to take for that project to finish. Do your research. That's probably the key thing. There's so many different opportunities now, and maybe looking at, rather than a single dwelling let, looking at a multiple, so that they're a high yielding asset that's generating more money. You almost need to have 3 different ways you could proposition a case. We could present it to a lender this way. If that doesn't work, what other options have we got? The worst piece of advice, but I didn't take it, was
Before we get into this episode, I just wanted to thank all of the people that have recently subscribed to our channel. We've had a lot of growth and comments and feedback recently, and they've all been super positive. All those comments, all those shares, all those likes, all those subscribes really help the channel grow. Please do check out our sponsors, and we look forward to growing with you. Hello everybody, and welcome to another episode of Property People. Today I am delighted to be joined by Sammi Gilbank from Hampshire Trust Bank. How are you today, Sammi?
I'm very well, thank you. Great to be here on a Friday morning with you.
Good. So just a very quick intro. You're a regional account manager for Hampshire Trust Bank, a challenger bank offering savings, mortgages and retail finance. You started your career as a mortgage broker, but since found roles with Interbay, Hampshire Trust Bank, and now Hampshire Trust. So property finance, one of my favorite topics.
Absolutely, that's what I live and breathe.
and a breadth of experience that I think a lot of people are going to find a lot of value, because I always say the 3 things you need is the land, the building, the site. You need the knowledge of how you're going to add value to it for the investors and developers out there, and then you need to have access to the money, and certainly you're the person that has that access.
Absolutely, yes, and that's it. I found, yes, as you say, went from mortgage broking and ended up working directly for lenders, but my passion is actually working with brokers to help them grow their business by offering them unique and niche products. So I find I'm kind of better suited to dealing with brokers rather than being a broker dealing direct with the consumer.
Well, we'll get into all of that, but before we do, I would always start early doors at the beginning. When you were at school, what type of person were you, and did you always know that you'd like to be in property finance when you grew up?
Absolutely, had never even entered my head when I was at school. So I was actually a bit of an all-rounder, but I really wanted to go into teaching. So I had it kind of set in my mind that I wanted to become a primary school teacher.
Wow.
And then it wasn't until I was getting older and I actually started to get into business administration that I realized that teaching just wasn't for me. I think maybe I'd done some kind of work placement in a school. And working with young children, I suddenly realised that you have to have an awful high tolerance and patience level to actually work with small people. So moving over towards business finance, you're working with grown-ups, so it's a lot easier.
Do you not need that same level of tolerance sometimes?
Sometimes you do, and certainly a lot of patience. But I then went on to college, and I did a business and finance diploma. And it kind of just snowballed from there. So, yeah, went from working firstly with an insurance broker, then into the banking sector, out into mortgage broking, and then back into the banking sector. So I've kind of gone full circle, really.
Interesting. So you did actually study business as a topic kind of post 16 years old.
Yes.
And then when you were working for the insurance broker, how did that come about? How did you get that job? Was that something that you'd found other people that were interested in it, or was it just an opportunity that came up and you liked the person and thought, let's give it a try?
It was literally an opportunity that came up. So straight out of college, I decided uni wasn't for me because I just wanted to go out and start earning money. So I signed up with an agency. A role came up with a general insurance company. And ironically, it was actually providing business finance, rather than car and home insurance.
Right.
So in a strange way, that kind of already linked me down that or into the path of dealing with businesses and not actually dealing directly with consumers. And I was there for about 18 months, I guess. And then an opportunity came up to work for a bank at the time called First National Bank. And my first role there was actually dealing with secured loans. So slightly different to mortgages. But yes, that was my first role in the finance industry, was with First National Bank.
First National Bank, not many people will know that name. So give us a little bit of background as to who they are and what they're about.
So they are no longer around as First National Bank. They were provider of secured loans for home improvements and also some unsecured funding for home improvements as well. But they were actually bought out by Santander back in the late 90s. And I believe they have been bought out further since. So they were never a high street bank that you would go to. They didn't have a savings division. They were there to support retailers who provided home improvements with finance for that.
And so like we talk about Santander and the bank that you just mentioned, and then we talk about Hampshire Trust, which we'll talk about, and Interbay, which is part of One Savings Bank, and now Castle Trust Bank. Before 2008, there was literally a handful of banks that you'd probably know on the high street, maybe a few building societies, which also turn into banks. And then there's so many different brand names out there these days. If you could just give a few people that are probably questioning kind of how is it that we've got so many banks, and what is the definition of a bank? Why are you a bank and some of these other lenders not banks?
So we're a bank. We hold a banking license. That's the key part to it. So you can't be a bank unless you have different divisions. So obviously we have a savings division, but primarily the difference is we have a banking license so that we can perform banking facilities, I suppose is the easiest way to break it down. Whereas some of the other lenders that are out there, they rely on funding lines, whereas we can rely on our own deposits. So again, they can lend money, but they're actually going out to market to buy those funding lines in to lend the money out the door, whereas we'll actually be funded by our deposits that we hold. So that's primarily the difference between the two.
And the deposits are from like custodial accounts, either just Joe Public coming to say, look, I want to put in into a savings account £100,000. You offer them a little interest rate, not a little one, but a generous one, hopefully, but certainly an interest rate, and then they will then lend that money out again at a margin. And that's how you operate ultimately?
Ultimately, that is exactly it as a bank. So we can obviously turn up, turn down what we need to do on the savings side to support the lending function of the bank. So the two kind of work hand in hand together.
Yeah, absolutely. And so just going back a couple of steps as well, because you went from insurance broker to mortgage broker. And then to lender, and you touched upon it in your kind of in the introduction. Just want to go into a little bit more detail, because I think that there are more people that I speak to on a day-to-day basis that really like the idea of property finance, and then they get caught up on whether they prefer to be the lender or whether they prefer to be in the broker role. And I do see it from time to time. Some people flip-flop from one to the other, and then they'll settle in one camp or the other. I've gone from lending myself to becoming the broker, and I think overall I prefer being the broker. And you've gone the other way.
Yes.
So in terms of the differences between the lender and the broker, from your perspective, what is the differences, and why did you prefer being a lender overall?
I think it's down to if you're a broker, obviously you have to hold in your mind lots of different products from lots of different companies to be a successful broker and know your market. Working for a lender, you're far more just in line where you've got one product that you need to remember and know inside out. And also, you need to be able to think about a deal, not only from the beginning of what the broker is asking you in terms of lending facility for that client, but also all that whole journey through to completion, and where any pitfalls could arise. So I suppose for me in a lending capacity, it's a little bit more problem solving and making sure that if it doesn't quite tick the boxes, how can I work with this broker to make this work for their client? So I think I much preferred almost the underwriting side of working for a lender rather than the more sales side of being a broker. Although I think in this market today, a good salesperson or good broker is the one with all the knowledge, not the sales skills. The two kind of do work hand in hand, but you're far more likely to gain the trust of your clients and have repeat business from them if you've got the knowledge to secure what they need. So yeah, I think I really enjoy delving deeper into an application to make sure that it works for us as a bank, so that we get a successful outcome for not just the client, but for our broker, who is our client at the end of the day.
Yeah, of course. I think that's interesting because you, as a lender, are taking all the risk in the end, and therefore you need to know that deal inside out, and you need to make sure all of that underwriting, all the questions have been answered correctly, and there is an element of a checkbox that you need to make sure that there's good enough security, it values up, the borrower has a good track record, doesn't have any necessarily, or if they have adverse credit, it can be explained, those sorts of things. In the specialist market, where Castle Trust Bank are operating, and we've done stuff together, from my experience as well, yeah, you're absolutely right. The broker, a specialist broker, really needs to know as much of that as possible so that they can have the best possible chance of getting a loan complete. And maybe that's changed over time. Maybe that the more specialist brokers have started to become more prominent in the marketplace. And because from my experience when I was a lender, actually there was a lot of applications that were being sent over from brokers that didn't really know, and they were like, "What can you do with this?" With just a forwarded email from a developer. Now what we try to do is underwrite the deal as much as we possibly can before we pass it to you. But that might not have been the case back when you started out as a lender, which was the first lending business was at Interbay?
The first lending business, apart from First National, which was way back in the 90s, yes, it was Interbay. And I think I'd gone straight from working for a large mortgage packager to go into a lender. And it was just nice to kind of really get into the detail of the product and what was needed and see it from the other side. So obviously, as a broker, you know the lender, you know their products, but you don't know how internally their mind works when they're actually assessing that application that's put in front of them. So it's really interesting to see the responses that are provided by a broker when they're putting an application in, how that ultimately affects the application. And different underwriters have different mindsets. So it was interesting trying to work out how they would want the information presented to them to get the best outcome for the client, if that makes sense.
Completely makes sense. And with Interbay, they're still going strong.
Yeah.
I currently have a loan with them as well. So they are popular. They do some really cool stuff. Tell us about your experience there. How long were you there? Did you love it? Did you like it? Did you loathe it?
I loved it there. I really did. All in all, I think I was there for just about 4.5 years. And I actually progressed internally from a lending assessor through to becoming head of the lending assessing department. And it was a great journey. I saw them grow considerably in the time I was there. When I first joined Interbay, they weren't owned by One Savings Bank as they are now. So I was there at the start of that journey as One Savings Bank came in, and then it started to grow very, very rapidly. And it was at that point I felt that I had probably gone as far as I could with them as a lender. And for myself, I then wanted to grow, which is why I was looking at new opportunities to take my own career to the next level. And that's how I ended up at Hampshire Trust Bank. But the interesting thing is, some of the broker relationships that I created at Interbay are still with me now, years later, at Castle Trust.
Yeah.
So that's great. It's one of those industries that, whilst you may move around and not stay with the same lender, if you've created the right relationships, they will move with you.
Yeah, exactly. And as I said, from One Savings Bank is also part of Precise and Kent Reliance, and they've done very well. And since you've been in the industry for some time, and I would say we're in the relationship business rather than the real estate business, because the longer those relationships you can carry on, chances are that you can move a few mountains along the way.
Yeah.
And then how was it that you moved from Interbay to Hampshire Trust Bank, and what was the big difference between the two organizations?
I think Interbay at the time I left had really started to grow. And I like being part of something that is growing. So, but right back from its infancy days, I guess. So there is a relationship that I've also had within the industry. A colleague of mine, a lady called Anna Lewis, who's currently our commercial director at Castle Trust. She and I work very closely together. We have the same work ethos, and we understand each other. And when you work really well with someone, she was the driver that made me go from Interbay to Hampshire Trust. And believe it or not, we're now together at Castle Trust. So again, it's relationships you build not only with your brokers, but internally at the lenders that can kind of push you to make a change. So when I started at Hampshire Trust, we were, again, quite small, not so well known in the industry, certainly not amongst the broker relationships that I'd left at Interbay. So it was nice to come in to a lender and go back out and spread the word and watch them grow. So over the 5 years that I was there, the team probably doubled and tripled in size. And I progressed there from being a lending manager up to regional account manager. So I was then looking after about 30 specialist accounts countrywide, and getting people to use us that had never used us before, developing those relationships. And that's what I find really exciting. That's where I get my buzz. Talking to someone that's never come across a proposition before, engaging with them and encouraging them to use us, guaranteeing them that I will give them the best service I possibly can. And it works. And as long as you can deliver on what you're selling and keep that service up, then that should mean that those relationships do stay with you. And that's proven through, as I say, having some relationships with brokers now that started 10 years ago.
Makes sense. And since you Interbay did so well with you being there, and then Hampshire Trust Bank, Castle Trust probably thought you're a lucky charm. You're a hard-working person that makes these companies grow, and wanted you to join, and you moved with the person that you're working with now. I forget her name.
Anna Lewis.
Anna Lewis.
Yep.
And you've made a great team at Castle Trust now, and all along the way, being that kind of broker liaison, building that broker network, and providing that exceptional level of service and interaction between the client, the broker, and the lender, trying to piece it all together to make sure that these applications, these inquiries are coming in, and then that they're well serviced. Because at the end of the day, as a good lender, and certainly as a broker, this is how we look at it: is if we're getting good feedback, it might not be a yes that we can do it, but at least if it's a quick no, or it's something that we can work on, and we're getting that communication, it's kind of comforting. And that's what you're really focused on, I guess.
It is. So it's making sure from the outset, when you're having that initial conversation with the broker and they're presenting a case to you, you're already kind of forward thinking, saying, oh, is this transaction going to work for us as a lender, and actually get through to completion. So then it might be that I will come back very quickly and start asking questions, or as you say, if it's not one for us, I'd rather be perfectly honest and say, do you know what, this isn't for us. But instead of just saying no, I'll always try and explain why it's not for us. So then, again, that just gives you the knowledge levels to think, okay, I remember Sammi said they won't lend on a particular type of property, for example, so I know that's not for Castle Trust. Or if I think it's something that has got potential, maybe not as presented, then I would offer a solution to try and make it work for us. And The beauty of working for specialist lenders, and certainly ones that are banks, is that you can speak to decision makers, because ultimately we are the ones that are lending the money. So therefore, a presentation could be made on the basis, this doesn't quite work with us as it is, but what if we could position it a slightly different way? Could we then get comfortable with it and lend to this client? So that's what I would say is the most important thing in the relationship, to know my product to help you.
And you know, some lenders, they are quite open-minded about the underwriter speaking directly with the client or being copied in on emails. And you know, you're obviously kept in the loop as an account manager, but and some lenders are like, you know, you'll never meet the underwriter, you'll never know what their name is. They're in an ivory tower somewhere. What do you think is the best approach? How does Castle Trust do that? And what do you think is the best approach in terms of having an underwriter being at the kind of negotiation end of making a deal work? Or do you think it's best that there's kind of some level of division to keep it objective as possible?
No, for us, we like our underwriters to interact with our brokers. As I kind of said a little while back, every underwriter has a different approach, a different way that their mindset works. So it's far easier for the broker to speak directly to the underwriter, and if they're asking for something specific, for them to be able to talk to each other and understand what it is that's needed to meet that requirement. Otherwise, you could end up in a situation, if all the correspondence is filtered through myself or one of my other team members, if we don't get that message completely right, there could be a danger that information comes back and it's not quite what's needed, and then you're repeating the same
It's lost
request.
in translation.
Exactly. So no, it's not that our underwriters, we don't want to be bombarded with calls. You know, they're not there to discuss new inquiries, but they are there to assist with ongoing pipeline cases.
And in the credit process, so if we were to discuss how it works, from my point of view, client comes to me, says, I need X. I put it into an investment memo, send it over to you. What's the process from there through to completion at Castle Trust?
So from an inquiry stage, if it's a very straightforward transaction, then I would issue you terms that you can present to your client. And if your client is happy with those terms, then for you as a broker, you can submit the case to us as a decision in principle. At that stage, we would then complete the initial underwrite of the case, which would include a full credit search. We'd be looking at the actual security to see that we were happy with its location, etc. Request any supporting documents that were needed and issue you with a decision in principle certificate. It's then down to you as the broker to work with your client to provide the supporting documentation to move it to the next stage, which is formal offer. And we also leave it to you as the broker to instruct the valuation, which is a very important part of the process. Once we've got that supporting documentation and that valuation, if everything marries up and we're happy, the next stage is to progress that to formal offer, where we then engage with solicitors to move the transaction forward to completion. Taking it back a couple of steps, if that inquiry came to me initially and it wasn't something that I thought straight away, yes, I know 100% we can do this, we have the ability to talk to our senior underwriters and our second line credit on a Teams call twice a day. So that means any slightly more complex transactions I can actually present on the call and get the confidence internally that, again, we're happy to move forward with that transaction. So what that means for you and your client is you've almost got that a really high level of certainty that that transaction will actually progress.
Makes sense. What, from recent experience, let's say the last 12 or 24 months, what is the most common reason that, and at which stage of that process do applications fail? This episode is sponsored by the PL&D Group. PLMD Group is made up of the PLMD Development, PLMD Estate Management, and PLMD Capital, providing expertise in real estate development combined with asset management. With more than 70 build-to-rent properties and £20 million of assets under management, PLMD's extensive knowledge of local planning policies have resulted in a strong track record, turning liabilities into valuable assets. The group delivers value through a fusion of experience, innovative design, imagination, hands-on management, and sustainable resources. To find out more about PLMD and the services they offer, head to plmdgroup.co.uk.
It's normally either valuation or something that comes up at legals. Majority of the brokers that we deal with that are on panel with us are very experienced. So they're very good at giving us the outlying information at the outset. So there's not normally a reason it would then fail unless, unbeknownst to them, there is something that the client doesn't make them aware of right at the start. But most transactions, it will be something on the valuation. It may be that the property down values, and therefore we can't issue enough funds for that transaction to work. Or it might be something comes up in legals, maybe there has been an issue with the planning in the past, or not the correct planning is in place, and that issue can't be overcome. So I'd say those are probably the two things. It's either valuation or legal stage where it could fall out of bed, as it were.
Yeah, absolutely. I agree. I think valuation is definitely one that scuppers deals because a borrower, just got their numbers wrong, or at least the borrower and the valuer didn't see eye to eye. But then there's legals, which I always find, that can usually be avoided. And sometimes it's like, hey, let's take a punt. I think it's going to be worth X, and let's see what the valuer says. But also you can mitigate that, in my opinion, if you provide reasonable comparables to say this is why we come up with that. But I think some people just don't necessarily do enough thorough research, and that can cause an issue. And then the legals. I always find the legals things get stuck in the mud, and it's quite hard to know. Well, certainly because I don't have a legal background, I can't kind of go into a file and do all the checks and make sure that nothing is going to pop up. And that's something that's normally out of the borrower's hands as well, to be honest.
Absolutely right, especially if it's a purchase, so they don't know the history of the security. Yeah. It wouldn't be until legal stage and those searches are being done and just like delving into the history of the security that these things would come to light. So they can be sort of unforeseen issues that are sometimes, most of the time, if you can get over them, great. And we work with some really good, highly experienced legal firms that will work with us again to try and find a way forward. But, certain things just can't be overcome, unfortunately, and cannot be foreseen.
And how does the lender decide, which end of the market that they want to get? They want to attack, or they want to embrace. They want, like Hampshire Trust Bank. You've got a product out there at the moment, which is, I believe, quite a stretch on what normal bridging LTVs are. So if you can give us an insight just on that one particular product, and in general, what's the thought process behind a lender coming up with, Interbay don't necessarily do that type of loan. How do lenders make these decisions and, behind the curtain?
A lot of it will come down to how the markets are at the moment. So over the last sort of 12 to 18 months, we have seen so much volatility in the money markets. As a lender or as a bank, ultimately your end goal is to make a profit. So therefore you have to be very, very careful when you're lending your money out the door that actually you are going to get a return on that will generate you a profit and enable you to grow as a business. So that's one side of it. So then if you have a product that's not doing that for you, you do need to have some innovative people in-house to be able to look at the market, see where there is an area of growth. And over the last year, one of the biggest areas of growth has been bridging finance. Along with that comes so many different lenders in that space, What you then have to do is find something that is different so that you have something that sets you apart from everybody else. So that's how we came up with our current 80% net refurb product, because every bridger could have the USP of speed and service. As a bridging lender, that really should just be part of what you're doing anyway. So yes, you need to have speed and you need to have service, but you need to offer something different. And nobody else in the market is offering an 80% net product currently today, apart from Castle Trust. But you have to have a certainty that that product is going to work in terms of, okay, bridging lending, short-term lending, there has to be a viable exit for this. So the 80% product was built around understanding what the borrower was going to utilize the funds for. So in this case, on this particular product, it's always going to be for refurbishment or conversion, something that's actually going to add value to the security, so that we could comfortably see at the end of the transaction, our loan to value had been brought back down to 75%, which is the kind of market norm. So that it's a very different spin on what other lenders are doing in terms of refurb. We are relying on the valuer to go out there and give us those numbers day one. So value of the security as it is now, and the enhanced value after those works have been completed. And as long as those two work on the 80 and the 75, that's great. We can then fund it at 85% and the client can get on with their project.
Makes sense. And I think that is really important, is to have a unique selling point within the marketplace. When you've got so many lenders these days, a lot of them are competing in the same space, whether it be development finance, bridging, even the buy-to-let stuff. And if you are competing in exactly the same space, the only real differentiator that you'll end up having is price, maybe some service, which does help, in speed. But having a really distinct product, I think, helps lenders stand out. And if you've assessed the market and you feel that actually, this is a safe way and a responsible way of lending, but we can do it in a way that nobody else has thought of doing it, then it makes sense that you attack that. And as I said, it's worked in the past for us. So if you had some advice on how best a borrower should approach an application, what sort of advice would you give them in terms of making sure that they got the best chance of success of getting a loan application approved?
I would say honesty, number one. Don't think that you could potentially try and hide something that won't come out further down the line, because ultimately it will, and that can cause issues and delays. Also, just be aware of your market, do your own background research, make sure that security that you're looking to purchase is at the right price point for you. Be sensible when you're looking at your costings and your timescales for works, because I think most of the problems with any kind of refurbishment or conversion project always come with people underestimating the amount of costing or timing it's going to take for that project to finish. So yeah, do your research. That's probably the key thing I would say to take away.
I literally did a webinar last night, and the 6 golden rules of property investing. My 6th point was do your research. I literally said that on the webinar. But at the same time, caveat with don't get paralysis through analysis, because I do sometimes find some people that are literally running around for 3-4 years just trying to find one deal, and it's like, okay, this doesn't stack up, and then you're stress testing it too much. And of course, better to do no deal than doing a bad deal. Not saying just dive in and regardless, but sometimes you've got to get busy. Otherwise, it's not really worth all the effort that you're putting in doing the research. But certainly knowing your numbers, knowing what your exit's going to be, especially if you're using things like bridging finance, and presenting that from the outset, I think is all helpful to make sure you feel comfortable that, one, you're going to do the loan, they're going to deliver on what they say they're going to do, and they're going to get their money back at the end.
Absolutely right. And one thing that we do that is slightly different from other lenders is we will insist that any of our bridging loans work from a refinance point of view in terms of an exit. We're not limiting people to only a refinance exit, but in the current market where property sales have slowed, we will apply an internal calculation to make sure that security has a good chance of refinancing out to an investment mortgage as opposed to just relying purely on sales, because that's quite dangerous in this current climate. I think any good broker will always encourage their borrower to have a dual exit, and that's kind of the way that we work.
Yeah, especially with bridging, I always say that it's best to have an A, B, and C if possible. So the obvious one is sale or refinance, and maybe something else. I don't know if you can come up with an alternative beyond that. Maybe you liquidate some other asset and you put some more cash in to pay it down. Something like that might be helpful. Or you've got another private borrower, friend or family that might be able to lend you the money in an absolute worst case scenario, and you can pay it down. Always having a variety of exits is advisable. With things like, we see it quite often, adverse credit acceptable. I think the adverse credit thing, sometimes people just say, oh, they've said that it's acceptable, and they pretty much accept anything that's adverse. How does that work from the institutions that you worked for in the past and currently? What sort of adverse is acceptable and what sort of adverse isn't acceptable?
Most of the institutions where I've worked have been slightly more flexible on adverse, but it all comes down to when it occurred and why it occurred. So the kind of thing that we're going to say no to is something that happened very, very recently, or where there's a particular pattern. So, for example, if someone is continually falling behind with payments either on unsecured credit or even secured credit, clearly that may demonstrate someone who's not able to manage their finances particularly well. Taking that against someone that had maybe something happened a few years back, which resulted in them having adverse credit, but it was an isolated incident. It was something that was going on in their lives at that particular point. And since then, their credit's been conducted fine. As a lender, we can kind of take a view and understand the history of that client, what was going on and what's happened, and be quite comfortable that that's not going to occur again in the future. Because, everybody's human. Things do happen from time to time that may set you off track a little bit. And the other thing that we're very flexible on is with portfolio landlords, for example, if you've got a lot of properties, you may not be provided with a utility bill or a mobile phone bill or something connected to a property that hasn't come directly to yourself. And if it is from a mobile phone provider or a utility provider and it's not paid and it results in a default, for example, but the rest of that borrower's credit file is absolutely fine. So any mortgages they have, any loans they have all been met and paid as they should be. We can see as a lender that clearly this is not an ability to pay. There's a miscommunication that probably has happened. So we're very likely to be able to take a view on that. But anything kind of recent, that's where we draw the line and say, you know what, this has only just happened. We don't know why it's happened, so it might not be the best time to lend them further money if they're struggling with what they've got right now.
Yeah, that makes sense. I think you have to look at the overall picture, try and make sense of it, that you're not getting them into more trouble. And in most cases where there is some sort of miscommunication or some sort of lapse, it can be fairly easily rectified. You just want to make sure that there's nothing that's untoward. I've had one case where there was a contractor, and he didn't even tell us, which was the bigger problem. So when we took it to the lender and it came up in the credit checks, there was about £50,000 of CCJ or something towards a subcontractor that was doing some drainage. And they were like, well, we don't really want to lend you the money if you can't pay. You've got that kind of stuff going on. We're about to lend you some development finance to build this single dwelling house. And you've got this dispute going on, and it's not even dealt with yet. It's kind of ongoing. So that kind of adverse, I guess, is not something that you'd probably entertain.
Absolutely, yeah. So that's clearly a current issue. They're not managing their current development very well, and the finances relating to that particular project. So that could be a bit of a red flag for ongoing lending and the management of their projects in the future.
And regarding the approach to presenting applications for those that are wanting to get things funded, there are two ways you can do it. You can, with some lenders, you can go directly to the lender, and you can sometimes possibly get favorable terms, or you can go via a broker. Based on your role as an account manager, but also from being in the industry for so many years, what would you advise borrowers to do? Would you advise them to approach lenders directly or go through a broker, and why?
I would say always go through a broker, unless it's a very, very straightforward transaction. But anything that's slightly complex, or you until you actually speak to a broker, you may not know what all your options are. If you're limiting yourself to going directly to the lender, that's the only information you're going to receive. And in this market, as you've touched on, there are so many lenders out there at the moment. So talking to a broker will probably, as I say, give you far more options and things to consider that you haven't even thought about.
Thinking about the best brokers that you work with, the ones you enjoy working with the most, what is it about those brokers that you that makes you like them so much?
I think it's just their absolute willingness to engage with their clients, provide them a great service, and encourage them back as repeat borrowers. So the same way for me, I love working with brokers that are going to continue to give me future applications due to a relationship that we've built. The best brokers I work with have exactly the same with their own client base. So rather than just being a bit of a machine playing a numbers game, those types of brokers who really don't know their own, where they want to sit in the market, so maybe they've tried to diversify in too many products, brokers that actually have a vision of what type of transactions they want to assist with, have a buy-in from their clients, grow that client base. That's my ideal broker, to be kind of on the same wavelength as me.
Yeah, of course. And you're speaking the same language. You kind of know how these products work, know the client inside out, and are able to communicate all that information quite accurately to you.
Yes, yeah. So brokers that actually understand what they're asking me, rather than just passing information from back and forth from the client. So being a bit more of a filter, I guess. So not presenting me with something where they haven't even gone back and checked it with their clients. So knowledgeable brokers that know their clients, know their market, know their space. They're the best types of brokers to deal with.
And in terms of more on a kind of societal level, if we would talk about women in property, this is something that I hear more and more come around. And you've obviously been in the property finance space for a number of years as well. Do you think, from your own personal point of view, that it's important to have more women in property and in finance? Or do you think it's one of these things that's kind of like organic, and it's like, it'll happen if it happens, and if not, it's not necessary. Like you obviously got into it, you stayed in it, you're doing really well in it. We love working with you. Do you see this as a thing that the property market would benefit from having more women, particularly?
I think yes, in a way, because there are a lot more female brokers out there now, and sometimes it's really nice for female brokers to engage with female account managers to make them feel more comfortable. I think for a number of years it has been very male or a male-dominated industry. And not rightly or wrongly, I think it is just the way things are, and organically more women will come through. But I think you have to kind of take it back. Younger women may not feel like finance and sales is an area that they can particularly progress in very well. So having more career opportunity from the outset for young women thinking of coming into a financial career would be better. But that goes all the way back to schools and colleges, etc. There isn't really much focus on finance for males or females. So I think a defined career path would be a good way of encouraging more females into the industry.
Yeah, I think about this from time to time. And it's great to have people like yourself that can inspire more women to get into the marketplace in an ideal world. And with finance, sometimes there's like it's all the rage now talking about these sorts of things, and some things are maybe more preferable to men, whether it be something to do which is more physical, and like there's all the stuff in sports. But it's certainly when I think about some of the professions within property, whether it be surveying or whether it be state agency or property finance, there is still a little bit of an imbalance where it seems to be quite a male-dominated environment. But kind of the more for championing more diversity in the property sector, and whether we do it through all this inclusivity stuff, or whether that's really necessary, or we do it. I'm more for doing it on a kind of meritocratic way, but certainly people like yourself coming to the forefront, being on channels like this, and being able to speak out and openly about what we do, hopefully inspires more and more women to join the industry if that's what they think is fun and exciting, which I obviously do.
Yes. I mean, as a bank, what we do encourage is apprenticeships, so people coming in as school and college
That's
leavers.
great.
And we actually have a young lady in our team at the moment who had never considered a career in finance. And a conversation that I was actually having with her the other day, she did say, I never thought this is something that I would do, not a career path that I would particularly choose. But having seen yourself and our commercial director, Anna, who's also female, where you've got to, she said, it's really inspiring. And when I doubt myself, I just look at you ladies and think, yes, I can do this. So it is really nice to be a role model to inspire young people kind of coming into the industry.
That is very, very good to hear. And with the way the market's gone over the last 12 months, we're now into 2024. What are your feelings? What's the sentiment? How do you think 2024 is going to go leading into 2025?
I think it's still going to be very unsettled. I don't think we're anywhere near kind of out of the woods as yet. Obviously, if the bank base rate drops, and that's what the indications are showing, that will really, really help. That's just kind of one side of the financial markets. But on the other side, as I've mentioned before, swap rates, if they continue to be sort of not flatlined, but very, very up and down, very unstable, it's still going to be very, very difficult for lenders to price and lend money out the door with confidence that they're going to make a return. So I honestly believe that by the middle of the year, that's when we'll probably start to see some reduction in the Bank of England base rate that then lenders can pass on to clients through their products. But it won't be probably for a good 12, 18 months that we're completely settled. And the problem is we've got so many other things going on in the world right now that can have a huge impact on the money markets. So until the rest of the world is kind of settled, then for us, I can see this is still going to be a very, very up and down, certainly for the next 12 to 18 months, for sure.
Yeah, there's still some uncertainty. The interest rates are still high. I think the Bank of England base rate held again at 5.25 recently. And whilst inflation rates coming down, that's the whole idea, right? There's still some pain in the marketplace.
Exactly, yeah. There's some headwinds to get through for sure.
And I always say that on the flip side, then for certain savvy developers, investors that can find those pain points, might be able to pick up a bargain or two along the way. So there's definitely for those that are keeping busy, are the ones that tend to get luckier in terms of the kind of opportunities they can uncover.
Absolutely. There's so many different opportunities now. So it's just having that ability to maybe pivot away from what you're used to doing and trying something different. Certainly because of the cost of borrowing money at the moment is quite high for a landlord to actually get a return on their investment. That's being squeezed and squeezed. So then it's identifying other opportunities and maybe looking at, rather than a single dwelling let, looking at a multiple, so either an HMO or a multi-unit block, just so that they're a high yielding asset that's generating more money. So where we've come into the market and pivoted to bridging, That's then opening up lots of opportunity for people to either take assets that they own and maybe change them to make them higher yielding, or give them the confidence to go out and buy an asset that's higher yielding. And where we've got this kind of 12-month term, historically 12 to 18 months on a bridge, by the time they come out of it, I think that's when the market really will have settled. And at that point, they should be able to comfortably hold that asset as an investment with an increased yield and better margins.
Yeah, I think that all of that's definitely on the horizon right now. I'm looking myself at the moment for some high yielding income producing assets, ideally on the south coast somewhere, and looking at kind of short let holiday kind of stuff, which usually gives you a pretty good yield. So it's definitely all about looking for opportunities right now, and also managing and maintaining what you've got as much as possible, and hopefully the happy days will only be around the corner. Say 12, 18 months away, right?
I think so.
Right, we'll hold you to that. We'll check. It's all been recorded. So you're obviously a professional, a successful person in the property industry. And this podcast is called Property People. So what do you feel is what sort of traits do you think that people need to have to become successful property people if they were looking to embark on this career?
I think they just need to have a very analytical kind of mind. So be able to take something and look at it all ways round. So not just be kind of flatlined into one thought about anything. It's one thing that I've learned is things can change very, very quickly. So you need to kind of, as you touched on, almost like where you've got 3 exits for bridging, you almost need to have 3 different ways you could proposition a case, for example. So, okay, we could present it to a lender this way. If that doesn't work, what other options have we got? So it's to be flexible, to be agile, and always keep your mind open to new ideas.
Yeah, absolutely. And in terms of the best advice that you've ever received, what would you say is the best advice you've ever received in your life?
That's a good one. Actually, to believe in myself more, actually, that is definitely the one. So it's, again, coming into the industry when I did, which was very, very male-dominated, you automatically feel a little bit like you're on the back foot. And just because someone is male and you're female doesn't mean that they're better or they know more. So it's really just to embrace your own knowledge, believe in yourself, and drive yourself forward. So yeah, believe in myself was definitely the best bit of advice.
That's a great bit of advice. And, actually, it's great. I'm so pleased to hear that you do these apprenticeships and you're getting people, young people out of kind of education to help them into this industry. I think sometimes I think there's some fantastic people that work within property and property finance, but I do feel like we can also help with educating some and training up some really the future of the industry, where there's a lot more technology involved as well. That's going to be quite interesting to discuss.
100%. And one of the things that we're actually working on as a bank at the moment is a new broker portal to make our whole process slicker and easier, and make turnarounds of everything much quicker, because a lot of the manual processes that we previously had in place with this new implementation of the new technology will take a lot of that away. So it'll make us a much more efficiently run department, which means then we can look to offer more products and turn your cases around even quicker. So IT is a really key part of driving this industry forward.
It's the future, right?
Mm-hmm.
And on the flip side, what's the worst piece of advice you've ever had?
I don't know, really. That's a very interesting question. Probably the worst piece of advice, but I didn't take it, was to not move on from one of the lenders that I was at previously, to take the chance and go on to where I am now. And part of me thinks, well, maybe they were holding me back. They didn't want to let me go, but they were trying to say to me, you really don't want to change career paths. You don't want to go to another lender. And that was bad advice, because it's actually worked out great for me and I'm really happy where I am.
Sometimes when people are soul searching, they don't realize that literally what they're looking for is literally where they are right now in that moment. In the same vein, though, sometimes you absolutely need to move on to grow, to be able to spread your wings and, you know, explore new horizons. And it's always difficult knowing the difference between which one. But I guess being bold and having the confidence that you did helped you progress your career.
Absolutely. Especially when you've been with someone for 5 years, that's pretty much the point. You're either going to stay and that will be it, or you need to move at that point. I think any more than 5 years, you probably get way too comfortable where you are, and you just be happy to accept that's it for you. Whereas I was like, right, okay, 5 years is now or never. This is probably the last big career move I'm going to make. So I need to have the confidence and just jump ship and go, which I'm glad I did.
The 5-year rule.
The 5-year rule, yeah.
Sammi, it's been great to spend some time with you talking everything about property, finance, banking, etc. If people wanted to reach out to you and find you, what's the best way that they can contact you?
Contact me on LinkedIn, sammi.gilbank on LinkedIn. Otherwise, directly through yourself. If there's anybody out there that is looking to go to their next property project, then I say Sam will be your best contact into me.
Wonderful. Thank you so much for joining us. And I look forward to catching up with you in the next 18 months and seeing if your crystal ball came true.
Absolutely. Thank you.
Thank you.